Hi everyone, welcome back to the Chapter 3 video lectures. In this video we'll talk about shareholders' equity. Owner's equity is simply total assets minus total liabilities. I think you remember this from your basic accounting class. Assets equals liabilities plus shareholders' equity can be restated in assets minus liabilities equals shareholders' equity. For that reason, it's sometimes referred to as the net assets or book value of a company. Because the owners of a corporation are its shareholders, owner's equity for a corporation is typically referred to as shareholders' equity or stockholders' equity. Shareholders' equity for a corporation arise primarily from paid-in capital and retained earnings. Paid-in capital is the amount that shareholders have invested in the company. It most often arises when the company issues stock. Information about the number of shares the company has authorized and how many shares have been issued and are outstanding also must be disclosed either directly in the balance sheet or in a note. Retained earnings represents the accumulated net income reported by a company since its inception, minus all dividends distributed to shareholders. A third component of shareholders' equity is accumulated other comprehensive income, AOCI. Other comprehensive income refers to changes in stockholders' equity other than transactions with the owner and other than transactions that affect net income. We must accumulate items of other comprehensive income in the accumulated other comprehensive income or loss account, just like we accumulate each year's net income that has not been distributed as dividends in the retained earnings account. We'll learn a lot more about other comprehensive income and accumulated other comprehensive income in future chapters. Illustration 3-8 in your textbook shows the shareholders' equity section of Nike's comparative balance sheets for the years ended May 31st, 2017 and 2016. This illustration presents the shareholders' equity of Nike's balance sheets from the inception of the corporation through May 31st, 2017. Nike has accumulated net income less dividends of $3,979 million, which is reported as retained earnings. The shareholders' equity section of Nike's balance sheets reports the full amount of paid-in capital in two accounts, the common stock account and the additional paid-in capital account. Information about the number of shares the company has authorized and how many shares have been issued and are outstanding must also be disclosed either directly in the balance sheet or in a note. Here, Nike has decided to show the number of shares outstanding on the face of the balance sheet. That means they must also disclose in a footnote the number of shares authorized and the number of shares issued. The accumulated other comprehensive income or loss has also been disclosed in Nike's balance sheet equity section. Let's talk about the bonus point scatter question words. The bonus point scatter question words for this video are to be, T-O-B-E. Well, that's all for this video. In the next video, we'll discuss annual report disclosures. See you next time.